Welcome back to our exploration of ethical behavior and the 5 fundamental principles of conduct. The 4th requirement for ethical behavior is professional competence. This requirement means that accountants keep educating themselves with regards to any changes in accounting standards and any legislation with regards to their profession. It doesn't seem to really tie into ethics, but if we go back to due care, which remember means careful and thorough, you can see that is only possible if accountants maintain up-to-date knowledge of accounting standards and legislation. On a personal note, I think ethical behavior includes the pursuit of excellence, and that pursuit is only possible if we maintain current knowledge within our profession. Last but not least, we have 5. Confidentiality. The definition of confidentiality is pretty straightforward. It means we can keep a secret or keep something private. That seems clear when a friend tells us, "Can I tell you a secret?" We immediately know that we need to keep the information private and not tell anyone else. However, accountants have to keep everything confidential, even if we are not told to keep a secret. It means that when we obtain information through our professional position, our employment, or in a business relationship, we have to keep it secret unless we get express permission from the other party to disclose it to someone else. And it means we can't use any of the information we have access to for our own personal gain or to give an advantage to someone else, called a third party. Let's give an example to clarify this. In December 2001, the Food and Drug Administration, FDA for short, advised that it was requiring additional testing for a new cancer drug produced by a company called ImClone. The company's shares after the FDA requirement was announced publicly in January 2002 fell from a high of $70 US per share to a low of $10. Many investors lost a lot of money, but amazingly enough, Samuel Waxall, the CEO of ImClone, and all his friends and family did not lose money. That's because they all sold their shares before the announcement was made, when the share price was still high. Samuel had not kept the information about the FDA announcement confidential. He did use the information to benefit both himself and others. In 2003, he was charged and sentenced to 7 years in prison, and he was fined $4.3 million. He was also barred from ever being a director or officer in a public company again. Samuel would have known that the information he received from the FDA was confidential, just like you know when your friend tells you that something is secret, that you have to keep the information private. The issue with accountants is that everything we learn through our professional relationships, or from our employees, or through our business relationships is confidential. We are not permitted to share anything with anyone unless we are given express permission, or we are required to do so by law, such as in a court case. This ties back into professional behavior. As accountants, we will protect the reputation of our profession. That reputation includes protecting the interests of others, and that means we keep everything confidential, and we never use any of the information we obtain through our profession to benefit ourselves or anyone else. Let's close with a reminder. First, ethical behavior is when, in every situation, we choose the action that is right and fair. We use the CPA Code of Professional Conduct in order to define what is right and fair. The code has 5 fundamental principles of conduct. 1. Professional behavior. 2. Integrity and due care. 3. Objectivity. 4. Professional competence. 5. Confidentiality. And we expanded on what each of these fundamental principles would sound like, look like, and feel like. So, what happens when accountants don't act ethically, when we don't do what is right and fair? Well, that's a topic for another video.